All right, guys. So it looks like the market has taken a tumble going into the election. So I felt like it was very, very, very important for you guys to get my perspective on what's going on in the market and what may happen after the election, depending on what happens. And part of the reason why I'm doing this is because I feel like I need to talk about investing and finance more. And I probably will after the election talk about it more. But one of my biggest pet peeves is bad financial advice. It is my biggest pet peeve. When I hear people try to tell people to move money out of their 401ks and put them into crypto currencies and funds of that and things of that nature, it really bothers me, because when you really understand personal finance and investing, you understand that it is boring and you should always have a long-term perspective, and that is very hard to sell. It is hard to sell simplicity. So keep that in mind, that is my perspective as I talk about my opinion on what's going on and what may happen after the election. Also, guys, really quick, I have to give a disclaimer here. This is not financial advice. This is just an analysis and an opinion. That's it. It's not financial advice. You should consult your financial advisor always. Now, before we get into that, my name is Greg Foreman and you're watching A Black Conservative Perspective. Make sure you like, comment, and subscribe. Most importantly, share A Black Conservative Perspective. You can also follow me on Twitter at GForemanBCP. Let's get it. All right, guys. All right, so let me show you this chart real quick from the Dow Jones year to date. Right now, it's around 26.2 thousand, and that is down negative 8.02% year to date. And more recently, we've seen a slide happen going into the election, as the Dow is on track to wrap up the worst month since March. So I'm on the Wall Street Journal. This is where I'm getting my information from. I will go ahead and walk through this and then let you guys know what I think. So, U.S. stocks fell Friday with the Dow Jones Industrial Average on track to close out its worst week and month since March, following a sharp sell-off in big technology stocks, which makes perfect sense to me because, as you guys are going to probably find out in this article, one of the big reasons why this slide is happening is because of coronavirus fears. And big tech has been leading the comeback from the initial drop that happened in March. However, they only can hold out for so long, guys. So if there is continued fear that the lockdowns are going to continue to happen, and also with there being no stimulus as well, some investors may decide to go ahead and just sell off on big technology stocks. As you know, at some point, real performance is going to catch up to stock price. Not that they're doing bad. It's one of those things where the global economic outlook just isn't looking great with Corona on the rise again. The Dow fell 1.3%. It has already shared more than 7% this week, putting it on track for the worst weekly performance since the height of the market turmoil. The S&P 500 fell 1.5%, and tech-heavy Nasdaq Composite was down 2.3%. Volatility has dominated markets this week, prompted by a record high in coronavirus infections in the U.S., fresh lockdowns in Europe that threaten economic growth, risks tied to the November 3rd election, and a mixed bag of earnings from big tech. Just like I stated before, when regards to big tech in terms of price actually catching up with earnings. Quote, markets are concerned that we are replaying February and March, said Chris Beauchamp, chief market analyst at IG Group. It probably still isn't in that category yet, but it's heading in the wrong direction. U.S. households boosted spending in September as higher pay helped boost incomes, according to the Commerce Department. But even as consumers increased spending since the summer, the pace of gains has slowed into the early fall. The yield on the 10-year Treasury was 0.844% Friday from 0.834% Thursday. Earnings reports and guidance from technology companies weighed heavily on big tech. Twitter plunged 20% after posting its slowest user growth in years and warning that uncertainty around the U.S. election could compress ad spending. Apple shares dropped 5.6% after quarterly iPhone sales fell from a year earlier. That, combined with the delay in the launch of the company's new smartphone, led to iPhone revenue falling more than analysts had expected. While big tech has driven the U.S. stock market recovery this year, that means, quote, when we see any disappointments on particularly high multiple stocks, then obviously the magnitude of the downgrade or the earnings miss becomes far greater, said UBS strategist Nick Nelson. Shares of Facebook, Amazon.com, Tesla, Microsoft, and Netflix were all down more than 2%. The big tech earnings were not that bad, but the markets did not respond positively. So that does suggest a deeper sense of negativity in the market, said Seema Shaw, chief strategist at Principal Global Investors. All right, guys, so I think that's probably enough information and context to move forward with this video. What is happening right there? There's a few things. So like I said before, price is catching up to earnings, and investors are starting to see that and maybe selling off. You can also see with Corona happening, the uptick in rise in Europe and in the United States, that is also scaring investors as they may be more lockdowns. And also, what was not mentioned in this article is the uncertainty revolving what's going on in the election, particularly whether or not we're going to get a stimulus. And guys, if you remember, when the market first fell from the lockdowns and Corona in March, a lot of the volatility was contributed to people speculating based off whether or not we were going to get a new stimulus. And once we actually got the stimulus, the market continued to steadily rise and almost get back to where it was at its peak and almost hit an all-time high again before now going back into this new downturn because we don't have stimulus. So when I'm talking about what may likely happen short term after the election is all based off of how the market is going to respond to the possibility of a stimulus, okay? And keep in mind, guys, right now we are gridlocked in terms of getting a stimulus because, one, Nancy Pelosi is not trying to pass one before the election because she's trying to get Trump out of office. That's the number one reason. And then two, the Senate Republicans don't really want to spend money on a stimulus. Trump wants to spend money on a stimulus. The Senate Republicans don't. So the Senate Republicans and Trump are at odds in terms of how they want to spend stimulus money. So keep that in mind as I walk through this. So the way to think about what's going to happen in the short term after the election, the way I like to think about it is possible scenarios. Which scenarios are going to result in the least gridlock? Now, according to the polling, and I'm just going by the polling here because these are the numbers that I got. I understand everybody doesn't agree with the polling. I understand that. But these are just the numbers that I have. So I'm just going to go with this. A scenario for most of us, including myself, this is the worst case scenario. Could be the best case scenario in regards to getting a stimulus at some point, in which you could see the market probably bounce after the election if this happens. And that is if the Democrats win the Senate, and right now they're currently favored to win the Senate by 538. That's them saying it, not me saying it. They're currently favored to win the Senate. And the Democrats are also, according to 538, clearly favored, heavily favored to win the House. Now, if the Democrats win the Senate and they win the House and Joe Biden is president, for a lot of people is a nightmare scenario. I do believe that that's going to result in a positive jump in the market because the market is going to know, okay, they're getting a stimulus. Now, what that means long term is tax increases, which means that short term, there will probably be a jump from the stimulus. Long term, however, the market may respond to the tax increases that is going to come under the Biden administration. And quite honestly, guys, that could already be factored in to the current price and what we're seeing right now that's happening in the stock market. That's also another hypothesis that could be true. Another interesting scenario, if President Trump wins the presidency and the Democrats win the House and the Senate, I also can see a stimulus coming because I think at that point, maybe the Democrats might be tired of playing games, and they might actually want to help the American people. And we all know that President Trump has said multiple times that he wants to spend big, and he'd probably be willing to do so at this point, especially if the cases continue to rise. There continues to be more local shutdowns. He's probably going to want to spend more, and the Democrats are probably going to want to spend more as well. And those are two things that President Trump and the Democrats do agree on. They both want to spend more. So short term, the market could see an increase from that scenario as well after the election, if that's what investors are thinking. The opposite scenario, let's say that the GOP wins the House, which is heavily unlikely at this point, according to 538, and they win the Senate, and they keep the Senate, and President Trump wins. I see the market bouncing on that as well. Why? Because one, we're probably going to get a stimulus. Now, it's not going to be a $2+ trillion stimulus. It's going to be a skinny stimulus. But we know with the GOP, they're going to target it specifically at businesses. And because we know that, I do believe that the market will respond positively, and they know that taxes will stay low. We're going to keep the Trump tax cuts long term. So you're going to see a short term and probably long term, you're probably going to see much more gains from a red wave than you would from a blue wave. So those are the two scenarios in which I see the market responding positively after the election. Now, the scenarios where I see the market not responding positively and in the short term falling is basically if things stay the same. We keep President Trump as president. The House stays the same. The Senate stays the same. I think that the market's going to respond negatively, at least short term. And the reason why is because that means that hopes for the stimulus is going to continue to be drained. But at the very least, we know that under President Trump, there won't be extended lockdowns like there will be under Biden. So that may help balance things out. But I think that continued gridlock in Congress is going to continue to make the markets fall. It's going to continue to scare investors. They're going to continue to sell off. So that's what could happen in that scenario. Or if Biden wins and the Senate remains red and even the House is still blue, there's going to continue to be gridlock, because you best believe the Senate Republicans, after what Nancy Pelosi pulled, will not easily pass a stimulus, especially a stimulus that's going to be spending trillions of dollars. They're just not going to do it. It's not going to happen. So basically, if there's not a blowout from either side, I think the market is going to react negatively, in my opinion, because of gridlock and uncertainty regarding the stimulus. But, however, with all this being said, guys, my investment philosophy is long term. None of this should actually matter to you. It only should matter to you if you're trying to trade off what's happening in the election, and none of you guys should be doing that. And that's why I started off this video basically saying how much I hate bad financial advice, because people telling you to do things based off what happens in the election are giving you bad advice. And the reason why is because when you have a long-term outlook, guys, which means 5 to 10 years plus, right, into retirement, short-term volatility does not matter. But I do believe, regardless of the administration, regardless of what happens this election, I do have a bearish outlook on the marketplace in the next 1 to 3 years. And the reason why is because it has been commonly accepted that we have the most overpriced market that we've had in literally decades in terms of price to earnings. And that stocks are overvalued, the market is overvalued, and at some point we're due for a real correction. So at this point, guys, you should continue to stick to your plan, have a long-term outlook, be diversified across the whole market, and just, even if the market falls, if you have a long-term outlook, double down, invest more. Dollar cost average. Put the same amount in per month or whatever period of time you want, and just keep investing, guys. Ride the wave. It's very simple. Even if the markets don't perform well in the next 1 to 2 years, maybe they will. Maybe they won't. Ultimately, in the day, I don't know. And even the best investors in the world that are getting paid millions, if not billions of dollars to do this, They don't know. It's all speculation. And the way to beat speculation is to rely on what we know long term about the market, which is that it is going to be fine and that it is going to go up and that we will continue to grow. Basically, trusting that America is going to be America and that we will continue to be successful. That's really what it comes down to. Unless you are legitimately about to retire, do not take a distribution or pull out from your 401k because that is a taxable event, guys. Now, I think Congress has waived the early withdrawal penalty so people can take money from their 401ks without to worry about paying the extra, I think it's 10% penalty last time I checked. I think they did waive that. However, taking a distribution from your retirement account is a taxable event, okay? So you need to be careful about that because when people tell people to move their money into, savings accounts, a retirement account and a savings account are two different things, guys. They're not the same thing. So when you move from a retirement account to what we call a retail account, that is a taxable event. And a lot of people need to understand that. So be careful with the advice that people are giving you when they're trying to tell you to panic, and sell out your 401k. If you don't feel comfortable with the volatility and you're nearing retirement, talking about trying to retire in like maybe a year or two, something like that, you might want to move into more short-term bond funds that are less volatile, or even worst case, if you really don't have an appetite for any risk at all, maybe even move into a high interest money market, something like that. That's what you want to think about. But don't take a distribution because you think you're moving money out of the market when you're really also moving money out of your retirement account, because that is a taxable event. And if you don't move it back into a qualified account, you are going to get an unexpected bill because that's going to count as income. Okay. I just want people to understand that because I hear a lot of terrible advice on the internet of people who don't know what the hell they talking about. So don't sell out your 401ks. Don't panic. Don't make hasty decisions based off what's happening in the short term. Volatility is normal, guys. It is what it is. In conclusion, guys, this is what I think will happen. But ultimately, for people to have a long-term approach and a diversified approach, it does not matter what happens with the market after the election. It doesn't matter, and it shouldn't matter. So don't go moving your money into Bitcoin just because you think that the world is falling if the market happens to take more of a tumble after the election. That's all I'm saying. Anyways, that's my take on that. Let me know what you guys think. Make sure you like, comment, and subscribe. Most importantly, share a Black conservative perspective. Peace.